Hey everyone, I'm Alice Toy at Century 21 in Niceville.
And I'm Bart Swan, Certainty Home Loans.
All right, today I was hoping, Bart, that you could cover this. It's a property tax bill. I got it in the mail this week, and I was wondering if I had to pay it.
You know, a lot of people have called me just in the last 3 days and emailed me to ask that very question. I got this tax bill. Do I have to pay it? And if you own the home, you have to ensure that that tax bill gets paid. It's your responsibility as a property owner to make sure the tax bill gets paid. However, most people that have a mortgage on their house don't have to pay it by writing a check because the mortgage company is going to pay it on their behalf. So let's look and see what a tax bill actually looks like here on our screen. So here's what the tax bill looks like. This is a standard kind of traditional tax bill, and what you're going to be looking for down here on the bottom is something that says that this is not a bill. Do not pay.
All right, so it says it right on there that I don't have to pay it, but what happens if you get one of these and it doesn't say that at the bottom?
That's a good question too, because the county only updates their records every September with who has mortgages that are going to pay this. And the mortgage companies actually update the county with whether or not they're going to pay it. So depending on the timing of when somebody bought their house, at least in their first year, the first time they get this tax bill, it may not say what it says down there at the bottom of the screen. It may not say, this is not a bill, do not pay. Because the county, at the time the bill went out, didn't know they had an escrow account to pay their taxes. So if you have an escrow account, you don't have to pay this.
Okay, so an escrow account. Can you tell us a little bit more about what an escrow account actually is?
Yes, an escrow account is required on all government loans, first of all. So if you have an FHA or a VA or a rural housing loan, you're going to have an escrow account already. So you don't even have to worry about it. If you have a conventional loan, you can maybe not have an escrow account, but that's very rare. So we're going to see, how do you know if you have an escrow account? Well, here's a mortgage statement from a mortgage. This is a very recent one here, actually. It's from last month. But you can see here that this particular person, this borrower, has an escrow account because right here you can see how much was paid to escrow last month, $262.74 to be paid for taxes and insurance. That means that the owner of this mortgage, the mortgagor, as we call it, the borrower, does not have to pay their tax bill because SunTrust Mortgage is going to pay their property taxes on their behalf.
So they've set aside the money in that monthly mortgage payment that's going to pay for that tax bill.
That is correct, yeah. So what other questions do we have here?
Okay, so I was noticing my property tax bill versus your property tax bill that we kind of have on here. And one thing I noticed was that I have exemptions on mine and you did not. So can you tell us a little bit more about what the homestead exemption is and who can get it?
Let's go back up and look at mine first. You can see there's no exemption amount here in the center part of the screen. And that's because this particular property that I own is a rental property. Okay. It's not my primary residence. But we can scroll down here and look at yours. And this one has a homestead exemption here in this column here, $50,000. That is because this is your homestead. This is where you live, as your primary residence, and you were able to file for homestead exemption with the county in order to be exempt from some of the property taxes. What the exemption does is it reduces your taxable value of your home so that your taxes aren't as high on the primary home.
So you're saving money when you apply for the homestead exemption.
That's right. Yes, you do. And you have to, a couple of things about the homestead exemption. You have to be in the house, living in the house by January 1 of the year in order to qualify for homestead exemption. Secondly, you have to file, provided you're in the house by, say, January 1 of 2020, you have to file for homestead exemption by March 1st of 2020. If you wait until after that date, you cannot file for homestead exemption that particular year.
And it's a good idea to do it, right? Because if you get it, you're going to be saving money.
Absolutely,
and who doesn't love saving money?
On an average house of, say, 193 assessed value, if your taxable value drops to 143, I mean, that's nearly 25% you're going to save on your taxes for that particular valued home.
Okay, that's a good deal.
Mm-hmm. Absolutely.
All right. And if anyone here needs more information on the homestead exemption, message Bart or I, and we can send you over a flyer and a checklist on how to get that homestead exemption for your house. Okay, so Our next question is, what happens if you don't get one of these in the mail?
If you don't get a tax bill, it doesn't mean that you don't have to pay the taxes. It's actually the responsibility of the homeowner to ensure that they get a tax bill and ensure that that tax bill is paid. So it's not the responsibility of the tax collector to make sure you have the bill. It's your responsibility to make sure it gets paid.
And here's a good question. What's going to happen if we don't have our tax bill paid?
If you don't pay your tax bill by the end of March, I believe it is, or the end of April, you will be, that's when it goes delinquent. So if you pay early, I'll show you here on the screen, if you pay early, you get a discount. And all of your mortgage companies are going to pay it early for your benefit. So you can see here, this particular tax bill, if you're paid by November 30th, it's only $2,045. But if you pay March 31st, it's the full amount, $2,130, which matches this amount here. So you get a little discount by paying it early, and that discount decreases over time. But if your bill is not paid by March 31st, then it goes delinquent. And then the county, within the next month or so, will sell tax certificates, which means somebody's going to bid to pay your taxes for you. You're like, why would anybody bid to pay my taxes, right?
Mm-hmm.
Well, the county starts at 18%, and they put out, okay, here's a tax bill that's not paid, starting at 18%. Who will buy this? And somebody says, well, I'll buy it for 17. Somebody else says, well, I'll buy it for 16. So it's like a reverse kind of an auction thing.
Okay.
It goes down to where somebody says, well, I'll buy it for 7%, and nobody else goes lower, so that person gets to buy it. That means they get to pay that tax bill, but then they get a 7% return on that at the time the tax bill is ultimately paid.
Okay.
If more than 2 years go by, that particular tax certificate holder can actually foreclose on the property, and then they get their return. Or if the homeowner finally comes clean or comes up to date on their taxes, then they have to pay that return to that tax certificate holder.
I think maybe one of our next videos should be talking about this tax lien process. This sounds like we could have a lot of information on this.
Could be. The important thing is make sure the property taxes are paid.
Right.
If you get a bill like this, contact your mortgage company. If it says this is not a bill on the bottom, then you're in good shape. If it doesn't say that, it might be because you just bought your house. Contact the mortgage company anyway if you have a mortgage and make sure that they're prepared to pay the bill.
Great. Well, thanks everyone for watching this video today. Please like our page if you want to see more great videos like this, and please share this video with anyone who got one of these in the mail this week. Thanks for watching, and we'll see you next week.
Bye-bye.